Hey, what's up? It's Dr. Doug, and we got you. It's another great Wealth Wednesday. My buddies from LOM Financial. They are still walking around with a pep in their step after meddling in the best of Cayman Islands. Joel Bodden, my friend. What's up, brother? Good to see you in studio.
Morning, Doug. Good to see you as well.
Good morning. You probably heard congratulations from a lot of people winning that medal, right? That was great.
Yeah, that's right.
Very nice and good work, by the way. LOM Financial. You know what? We get together once a month and we be able to kind of break down exactly what you guys do and some tips. We call it Wealth Wednesday. Dividend Value Portfolio. Now, a lot of people are driving around right now. They have no idea what a DVP is. Can you tell us about growth stocks and obviously value stocks? What are they and what's the difference there, my brother?
Right. So first off, just in a nutshell here, the Dividend Value Portfolio strategy is an in-house product that we offer by LOM, and it's our asset management team works very diligently to pick those tools, or instruments, I should say, to allocate within that fund.
Okay.
Generally, you're ranging between 20 to 30 stocks on average. Those are valued and growth stocks. So when you think of value growth, you're looking at buying something at a discount, essentially, right? So those are mainly stocks that pay moderately dividends, good price to earn ratios, etc. And what happens with that dividend when it's paid from those stocks, it's reinvested. So
you're not cashing out; you're actually reinvesting it here, and it's the power of compounding. That
correct,
right?
Correct. So it's not really set up for someone that's looking for a monthly or quarterly income per se, but it's set up for someone who's looking to put that capital to work. Dividends are being paid through the account, reinvested, and that's yielding somewhere around 8 to 9% gross.
Wow.
And I do have to add, it is coming in at a lower minimum, which is $250,000 USD. Previously, it was $500,000, so $500K. So we've lowered that to make it more attractive to both retail and institutional investors.
So the dividends get reinvested back in, man. That power of compounding again. We've learned every single week when you guys are in here. Such a big deal. Tell us about value stocks.
Yeah, so valued stocks are pretty much in the same, that same scenario where you're getting things at an appropriate valuation. You're not paying more for it per se. Now, valuation's a tricky one because that depends on, as we have seen in the past several years, months specifically, valuation is changing drastically. Right. So what does valuation mean to an investor? It goes back to supply and demand, really. But they use certain tools, metrics, to deem things appropriate.
And you guys, man, I'm telling you, you and your research team and you guys are the best in the business being able to figure out these.
We try to be,
Yeah. Hey, how do people get in touch with you, my friend, and be able to talk to you? I love the Dividend Value Portfolio that you guys offer with LOM. Maybe someone has some questions about that. How do people get a hold of you there, my friend?
Certainly. You can reach us at 233-0100. We're just out in Camana Bay on the second floor, right across the street from Scotiabank. So you can stop on by as well.
I love it. Real quick, in our next segment, we're going to talk to Louis Cohen. He apparently, word on the street is, and I want to see if you share the same view, that now's a great time to buy, a great time to jump into the markets. What say you?
For me personally, 100%.
Yeah.
No, that's because I'm very less risk adverse, I would say. I'm all in.
Yeah.
But I think it goes back to the individual. It has to be a tailored plan in terms of your risks, your objectives, your time horizons. But generally speaking, I think it is probably a good time to even do a dollar cost averaging strategy where you slowly drip into the market.
Yep.
It doesn't have to be everything at once, but the data suggests that out to 2024 and 5, we should expect a few rate cuts and whatnot. So if that continues to go on that trajectory, then you're looking at stronger data into a bull market, which is a good signal for equities.
I love it. By the way, ladies and gentlemen, I got to tell you, he had a little gleam in his eye. He had a little glow in his eye when I asked him if now's a great time to buy. I guess I want to play poker with you. That was a tell right there. He said it is definitely a time. Coming up next here, Wealth Wednesday, our buddy Louis Cohen, a market update here. He'll explain why he thinks that same thing. It's a great time to get into the markets. Hey, it's a Wealth Wednesday. It's K-Man's Greatest Hits. You got gold. Dr. Doug and my buddies from LOM Financial, Louis Cohen. It is good to see your face in the place. How are you, sir?
I'm great, Doug. How are you doing?
Thank you, my friend. Welcome back. And by the way, we got the market overview. I always love talking about, and I think about you when I'm watching CNBC and these other financial shows, talking about the markets and about certain terms that you've used all the time on a Wealth Wednesday. We talked going into the break here last time about the market right now. You think it's a great time to jump on in. And why is that?
Well, Doug, look at market seasonality. Okay, so typically speaking, if you look at take the S&P 500 over the last 20 years. Okay, you get a late September meltdown and then an October low. So if you look at the month of September, we got around 10% from the all-time high in terms of a discount.
Yep.
Market moved lower. Okay, through September. That is what historically has happened as well, is slowdowns in the month of September.
Okay.
So we see any pullback around here as a longer-term buying opportunity.
Great.
Presuming that you're okay with market risk, presuming that you have at least 5 years in the market, S&P 500 saying a broad-based index, diversified index, take advantage of the dips in the market, could be a very good thing.
You think right now is a great time then to be able to jump into this as well, and then we hear about, and what's like the term Santa Claus rally? I mean, you talk about the end of the year, fourth quarter.
December rally, yeah.
What's that mean?
Well, Santa Claus is coming, right? Christmas, 25th December. So the, Santa Claus rally is where the market runs up into the Christmas
If this
period.
happens every single, for over 20 years in your data that you see, why isn't everyone else and their dog jumping aboard on this too as well? It's just like a hidden secret that's not really hidden.
Every single year, every single day, the market's different, okay?
Yeah.
Now, you like to spot trends in the market, and sometimes trends stay true, other times they don't. But typically speaking, if you've got a 10% pullback from the all-time high, that's not a bad place to start. As Joel mentioned, a dollar cost average strategy, bringing your average down, or for new investors going into the market for the first time, start putting money to work.
Okay.
And the good news is it's not just about the stock market. Interest rates are above 5% now. The stock market's not the only game in town. Fixed income, bonds, okay, you can get 5-6% net yields here on 1 year and multi-year bonds.
Are you getting a lot of people calling up and asking about the bonds right now? Because it feels like that's like a super popular...
Yeah, absolutely. They're low-risk investments, presuming you buy investment-grade, A-rated bonds.
Yeah.
And, it gives you a different sort of exposure rather than the stock market. Some people don't want the high volatility stock market exposure. Other people want fixed income, okay? Bonds, lower risk investment.
Okay, so real quick, in our last about 60 seconds or so, tell us about some sectors you guys are looking at. You're always good with this because you're doing your research and being able to check out what's hot or what's potentially hot for down the line. Give us some of the research that you guys have in sectors that you're looking at right now.
Yeah, look, so if you have a 5-year horizon, you want growth as your strategy, you're happy with volatility, pullbacks in big tech, have been great over the last decade, and I think will continue to do well over a 5-year period. So that's something to look at, especially as we've got some weakness now in the tech space. The pain might not be over, but buy into weakness. Long as you're a long-term investor, I think it's a good place to be. Banks have been horrible over the last year for obvious reasons, but especially obviously compounded with the regional banking crisis hasn't helped matters at all, and downgrades from major credit agencies have also has not helped banks at all.
You think they're going to be able to, long-term, be able to rally back a little bit?
Well, I think once you get rate cuts next year, and you will get rate cuts next year, in my opinion,
the water's going to chill out a little bit.
Absolutely, and I think the banks could be could have a very good setup. Maybe a lot of pain for the next 6-12 months, but I think if you're a long-term investor, while the price is low, valuations are looking considerably cheaper than they did a few years ago, then it could be a good time to start thinking about exposure in the banking sector.
Awesome. Of course, LOM Financial. Give us your platforms and how do people get a hold of you there, Lewis Cohen, and get more information and even ask any questions about some of the stuff they've heard.
Absolutely. You go onto our website, lom.com. You can contact us on local number 233-0100. Or come and see us. We're in Commander Bay. We have an office here in Commander Bay. Drop in for a coffee. Consultations are free. We're more than happy to help. Anything you've heard us speak about today, by the way, is might not be right for certain individuals.
Correct.
So everyone's got their own circumstances. We like to explain risk, diversification, and give tailored investment advice. So it's best to come and speak to us.
Right. In person, one of the things you mentioned, risk tolerance. And our next feature here coming up, risk tolerance. You hear about people's wins. You don't obviously hear much about their losses. We're going to talk about risk tolerance coming up in a little bit. And a scenario from our guys at LOM Financial. LOM's Wealth Wednesday with gold. Hey, Hey, it's a Wealth Wednesday. You got LOM Financial. My buddies Joel Bodden, of course, and Lewis Cohen, the guys from LOM Financial at Camana Bay. These guys are great. We've been talking about on a Wealth Wednesday, talking about money. Now, this story that you're going to share, this scenario, and you're just going to name this guy Bob, and he actually did something that friends of mine, and I'm not going to name him on the radio, Lewis Cohen, it did exactly what this guy did. Invested in cryptocurrency and spent about 30, 40 grand in crypto, and all of a sudden made a whole bunch of money in a quick amount of time, was bragging about it on social media and, telling everybody about his big wins, invested even more, and then it got crushed. And now he's singing the blues a little bit. I'm sure you hear stories like this. Share with us your scenario of customers that you've dealt with like this and risk tolerance, my friend.
Yeah, Doug. So, have you ever heard of the phrase, don't put all your eggs in one basket? Mm-hmm. It's not just crypto related, it's anything related, whether it's, growth stocks or in a single stock. It's really about diversification, okay? That's going to be the main segment that you can take away from this. Yeah. Diversification. You want to have crypto exposure? Fine. Have 1%, 2%, 3% exposure, okay? You should have broad-based exposure across numerous asset classes, whether it's real estate, equity, stock market exposure, bonds, gold, whatever it is, but keep it broad-based.
Do you deal with this? I don't want to name any names or anything like this. Do you have customers that have that either put all their eggs in one basket? Have you heard of these horror stories before, firsthand?
Absolutely heard about them before. I always advise against all the eggs in one basket when it comes to my clients. Diversification is absolute key into whatever you do.
When you hear the line diversification is your best friend, break that down a little bit for our audience. What's that mean?
Well, let's take the scenario right now. Bob, in quotation marks, put all his money in crypto, and when the market swings against you, your whole portfolio is impacted, right? Now, let's say you had broad-based exposure in the stock market. Let's say tech takes a drop, but utilities and your defensive sectors move up. You have a counterbalance. Think of it like a weighing scales, okay? You put different weights on the scale or different weights on the barbell, okay, to almost have an equilibrium, to have diversification across a broad range of assets. So that's the best way to invest. When other assets do poorly, other assets do better, for example. When the stock market does well, bonds may lag. When the stock market does bad, bonds do well, typically speaking, okay? So that is the sort of thing of which I like to talk about with my clients. Again, just try to avoid attractive, get-rich-quick type.
Boy, you seem to hear about those a lot, huh? It feels like there's, every once in a while, there's red-hot things, and of course, notwithstanding the whole AI thing and all this other stuff, which has been a license to print money, it feels like lately. But you got these other areas of cryptocurrency, et cetera, and these people that put a lot of money into this, make a lot of money, but then you hear about people getting hammered pretty good, right?
Yeah, and you know what? It doesn't mean you have to just avoid growth. That's not the message here, okay? You can target growth for an overall portfolio, but you do it by using, number one, professional advisors, professional investment managers to help you achieve it, okay? So what analysis are you doing? Are you just listening to someone on TV? Did your friend give you a tip?
Right.
How are you going about building your portfolio? Are you doing a bottoms-up analysis, meaning do you look at individual companies on their own merit? Are you looking at their financials? What are you basing your investment decisions on? Okay, and if you haven't got time to do that, then come and speak to someone like us. It doesn't have to be us. It can be, there's numerous banks, other institutions, but try and speak to 2 or 3 people, professionals,
right,
and get an idea of what you should be doing and how you should be doing it.
I've seen you work. I've seen you with multiple phones, working different graphs and charts to try and have a conversation with you when you're watching the.
You always have my attention, Doug.
Yeah, you're watching the the market closes in 2 minutes, and I want a guy like that fighting for me. I'm not kidding you. Anyway, Joel, in the final 30 seconds or so, any final thoughts on our Wealth Wednesday here today, sir?
I think it all boils back to a tailored approach. Some individuals may be looking for a more aggressive strategy. With all that being said, you can treat your customized portfolio, I like to use the terminology, like a chessboard. Mm-hmm. You can use a certain percentage of those pieces.
Piece of the chessboard would be cryptocurrency then, in that case.
That would be a pawn, in my opinion.
Thank you for saying that.
And you take your profits when they're due and you put those back into bigger things that are long-term holders. Your Berkshire Hathaways, those blue chip stocks, and you Yeah, you save those for a rainy day.
Man, you're good at what you do, you guys. Once again, give up the information about how people get a hold of LOM Financial.
Yeah, you can reach us at 233-0100 or contact us at LOM.com or stop by in person in Camana Bay.
Louis Cohen and the one and only Joel Bodden, the guys from LOM. Much love, my friends, and you guys have a great day, and of course another great Wealth Wednesday, and we'll come see you guys soon over in Camana Bay. I hear you're serving up the best coffee at Camana Bay.
Thanks, Doug.